Welcome to the November market outlook from the blockchain.com team entitled Bow Wow Wow. It's been an incredible month and we have a lot to cover today. So a little bit about blockchain.com. My name is Nicholas Carey. I'm the co-founder here, as well as the founding commissioner for the Blockchain Commission for Sustainable Development and the author of The Future is Decentralized. I want to talk a little bit about the firm and give you an update on all the work we've been doing here. So if you don't know, blockchain.com is the world's most popular place for people to start their journey into crypto. If you haven't already tried it before, you can download our wallet for free from the iOS or Android app stores, as well as sign up online from blockchain.com. We've had over 77 million people from around the world sign up for a cryptocurrency wallet, and it's been the fastest year in our growth ever before. Those users have performed over $1 trillion worth of transactions on chain, and we're regularly seeing over 60 million impressions. So a lot of people are excited about what's going on in crypto. There's sort of two sides of the business. There's the consumer side of our house, where we provide wallet services, a cryptocurrency exchange for active traders that want access to deep liquidity and a lot of different pairs of different crypto assets. We have a blockchain explorer, which lets nerds, academics, and folks in the press and media to look at what's happening on the public ledger on-chain sites and basically study what's going on. We also offer a bunch of partnerships we're excited to share some updates on with you today. On the institutional side of the house, we have an entire lending operation, over-the-counter trading and spot, liquidity and execution capabilities, custody services, active network participation for decentralized protocols, and an asset management operation as well. So if anyone is interested in talking about those things, please get in touch. We've been very busy here at blockchain.com. We've just announced margin available for specific markets and on a couple pairs on the blockchain.com exchange. So if you're eligible in a compliant market, you'll be able to access margin. And we have also launched Maryland and Michigan for all of our custodial products. And all of the apps have also been updated over the past 30 days. So make sure that you've got the latest version of your blockchain.com wallet for iOS and Android. Okay, if you haven't seen the updates to the website, brand new homepage, looking really strong, great place to send friends and family if they're curious to learn a little bit more about how crypto works. We have a whole learning center for them. The exchange also has been getting a lot of updates. If you are looking to earn some rewards with your crypto and own some crypto, you can deposit that at blockchain.com inside your wallet and earn some rewards. So on the next slide here, we've got the current rates for those rewards. And it's a great way to earn some yield on your passive crypto while also still having a long-term hodl-ish position on it. If you're not aware, we have made a lot of updates to the exchange, again, launching margin in the last 30 days for select markets and select users. So it's a pretty advanced feature, but it's one we've gotten a lot of requests for and really excited to roll that out. Finally, really excited to announce a special bonus. If you didn't know, blockchain.com turned 10 years old last month. So we've been at this for over a decade. The official birthday was on October 15th. And we've been excited to share a special giveaway. So if a new user signs up for a blockchain.com wallet and buys at least $100 worth of crypto, we're gonna give you $50 worth of Bitcoin for free. And so we're giving away up to $1 million worth of crypto in this bonus giveaway. So please share the good news with your friends and family and anyone you've been on the sidelines. A great way to get access to some crypto. All right, one little last plug here because we want to get into what we've been working on. We have a lot of open positions here at blockchain.com. The company has grown extraordinarily. We've had over 1,800% growth on the human side of our team. And we're looking for the best people in the world to help us solve some big challenges. So if you're a software engineer, if you're a data analyst, if you work in compliance or even have a legal background or a creative one, we've got roles open in basically every core team across the company. And we'd love to have you come join us. Okay, last time we spoke, we had the great and powerful Kathleen Brightman, co-founder of Tezos, on to talk about Tezos and the Tezos ecosystem. So if you missed that, you can find it on all of our streaming services as well as on YouTube. And today, we've got a few things we're going to cover. So we're going to do a deep dive into on-chain analytics. The folks on the data science team at blockchain.com have pulled a lot of interesting metrics for us to study. And then today, very excited to announce a special guest, Dr. Markus Franke, partner at C Labs and co-creator of Celo, a very exciting project that has a ton of backers from all over the world. So very excited to bring him on. We'll get through the first part here quickly so we can have a good conversation with our special guest. So without further ado, I'm going to hand this over to my colleague, Dr. Garrick Heilman. Dr. Garrick Heilman is the head of research here at blockchain.com and one of the foremost economists. His work is regularly cited by the BBC, CNBC, Wall Street Journal. I think his phone has been ringing off the hook the past few weeks as everyone in the press and media is trying to get their hands on what's happening in the cryptocurrency space. I know his name has been cited in articles related to the Shiba Inu phenomena, to Dogecoin phenomena, and also the record prices and record amount of value being stored across crypto at this very moment. I think we're hitting an all-time high for total market caps across all cryptos literally today. So could not be a more important time to be digging into these things. I'll pass it on to Dr. Garrick Heilman.
Great. Well, thanks so much, Nick. And yes, it has been a busy time of late, and it's fun to talk about dog-themed coins, which inspired our theme for this month. Bow wow wow. We'll talk more about dog-themed coins in a moment. But first, let's just look at the October numbers. Crypto roared back in October. Bitcoin and Ethereum both up over 40%. Good month for markets in general. Even gold was up. Gold and bonds. We track the long dated U.S. Treasury bonds are the big losers still for 2021, down over 6% each. Yeah, great month for crypto, and in general, really positive month for crypto assets and markets as a whole. When we look at the on-chain activity, and this is important as we try to peer into the fundamentals, what's actually happening outside of just the price action. We see strong fundamental growth in transactions and payments and hash rate. The fees are going up slightly from $2.50 on average per transaction for Bitcoin up to $3 on average in October. That of course is something that puts a bit of a friction into on-chain activity, but it's a healthy sign of demand for a finite resource, block space. And so we see that as positive. It helps increase the security of the network as well. Number of daily active addresses, all of these on-chain metrics support the price action. They're in alignment. And still $3 per transaction, just to comment on that, during periods where we've seen massive upward swings in the price of Bitcoin, historically, you would not be seeing such a relatively muted increase in transaction fees. I mean, 27%, that certainly is significant in terms of the change month over month, but nothing like if you go back to December 2017, in periods where, transaction fees would go up, multiples month over month from the prior month when the price is really booming. So I think that speaks to the added capacity of the crypto networks of exchanges to accommodate flows and so on. All of that is a healthy sign that we're building good infrastructure here in the crypto industry space. I want to briefly touch on a topic that came up this just last week, which is a paper that came out of MIT and the London School of Economics, where I'm a visiting fellow. Some finance professors looked at ownership concentration of Bitcoin and kind of repeated a claim that basically, Bitcoin and crypto assets in general are very tightly owned. And fresh off the press today is a piece of analysis from Coinmetrics, which I think provides a nice counterbalance to that perspective. We've actually seen a big increase in the number of Bitcoin addresses this year that own at least 0.01 BTC units. Rising from 8.5 million at the beginning of the year to 9.1 million today. This is just one measure that we can use to try to track whether Bitcoin ownership is expanding. It's a complicated question, but the reason I wanted to mention this, and some of you may have experience with this as well, when you're talking to newcomers about owning crypto assets, one of the questions that sometimes comes up is, well, I feel like I'm late, and there's other people who got in earlier, and me coming in late, that's just going to make those folks better off. And it's true that people have gotten into crypto maybe before a lot of folks out there, We estimate at least 100 million people today around the world own crypto assets, but that's still pretty early in our view. We think billions of people are going to use digital assets, digital payments. It's still very early. And I don't know if this is a great analogy to kind of like, kind of soften kind of some of the psychological friction with coming into something maybe later than your neighbor or your friend. But, I imagine, people thinking, oh, I don't want to buy Apple stock because Steve Jobs owns so much of it. That would be obviously a really, really bad call to kind of take that view, and for that to be, something that held you back on, say, owning, say, a tech stock that is also tightly owned because of, founders having a significant interest in it. Or, if you go back to, the homesteading period, oh, I don't want to move out to California because some homesteaders maybe got there before me, and that might increase the value of their real estate if I move there too. Maybe that wouldn't be such a great view to take as well. But anyway, there are some quantitative measures that suggest that Bitcoin ownership is expanding, and that this is not an issue that should be really a big concern or really holding people back from getting involved with crypto. Lastly, before we turn to our special guest, I just want to talk about the dog phenomenon, dog-themed coin phenomenon. We saw Shiba Inu coin flip Dogecoin. For those less familiar with what's happening in the dog-themed coin corner of the crypto markets, meme coins have become a big deal this year. Earlier this year, Elon Musk championed Dogecoin, went on Saturday Night Live, even got his mom to say something about Dogecoin in the opening skit. This is a phenomenon that cannot be ignored. We have now 2 dog-themed coins in the top 10 rankings, and it really speaks to, I think, the social and kind of messaging aspects of crypto adoption, and make money fun again. I've heard that slogan kind of like passed around, and so I think we need to kind of take this a little more seriously than sometimes folks with PhDs maybe are inclined to take it. And we're learning something I think very important about social adoption, and it's just been a watershed year in terms of what memes mean to adoption and price action. Having said that, I also want to sound a bit of a warning, and we've got here a picture of a very intelligent, sharp-eyed looking wolf, because we have seen some aggressive activity in markets, some rapid shifts. And you do need to be cautious around some of these meme coins. They live by the meme, they can die by the meme. And so the landscape can shift pretty quickly. But having said that, I think it is a phenomenon that we do need to keep an eye on. And I think something important is happening here around kind of the social aspects of crypto adoption and financial product adoption. So with that, very light warning and discussion of dog-themed coins out of the way, I'm very happy now to turn to our guest, Dr. Markus Franke, and Nick's going to take over for the introduction here.
Thank you, Garrick. Yeah, it's pretty interesting to watch the dog-themed meme coins really sort of play out some of Metcalfe's law and the argument potentially there. So be interested to maybe have a little discussion on that. But most importantly, I'm really excited to introduce Dr. Markus Franke, co-creator of Celo. Markus and the team at Celo work to remove barriers in large-scale adoption of cryptocurrencies as a payment method. Their project has raised a large amount of funding and gathered support from zeitgeist of philosophers, academics, researchers, philanthropists, and really big scale investors as well, backed by Jack Dorsey, A16Z, many more. So very excited to learn more about the project and also dig into some of the views you store around how we're going to get billions of people in the world to start to use crypto as a form of payment. So please welcome to the show. We have a little tradition here, Markus. So once you're unmuted, the very first question we ask everyone who's ever joined one of our podcasts is, how did you earn your first buck, your first dollar, yen, euro, pound, or maybe Deutschmark?
Yeah, thanks for having me on the show, and thanks for this great introduction, Nick, and thank you, Garrick, as well. Really exciting to be here. And yeah, it's a good question how I earned my first buck. It was actually my first buck was like a summer job during school, and the interesting thing was is like not far away from where I lived. There's like this jewelry producer, and I sorted diamonds for this jewelry producer, and basically not like high value diamonds, but very cheap ones. But this is where I earned my first buck, and yeah, that was my first job.
I like nice shiny things. I can relate. I get it. So before we get into some questions, I am excited to touch on an upcoming kind of pre-announcement. We weren't sure exactly how to do this today, but we felt at the top of this would be a great time to share that blockchain.com and Celo have joined forces to bring the benefits of stable coins to our European market. So very soon, you're going to be able to buy, sell, trade, send, receive Celo Euro, the C Euro, in the blockchain.com wallet in exchange. You'll also be able to earn up to 4% in your rewards by holding the stable coin inside the blockchain.com rewards account. That's a really big deal because everyone in Europe, as you know, are seeing negative interest rates for all their saving accounts. So this is a way to guard a little bit against wealth destruction in that way. Really excited about that partnership. So thank you so much for working with us on that. And to celebrate it, we're going to be removing all the fees when buying the Celo Euro coin within the blockchain.com wallet for the first month or so. So a great way to get access to a stable coin. We're going to be learning a little bit more about how that stable coin operates today. And we've got the right guy for the job to explain all that with us now. So we learned how you earned your first buck, but how did you get into crypto, Markus?
Yeah, thanks. And yeah, also I'm super excited about this partnership and having a Celo Euro on blockchain.com. I think this is really, really cool. So I'm an economist by background. So I studied economics. I did my PhD in economics, and then worked in what I would call today traditional finance for longer. So I worked at different research institutions doing basically research on traditional economics, and then also worked in investment banks as a banker, but also as an asset manager. And then I think 6 years back, a good friend of mine told me about, on the one hand, how many people in the world are underbanked. Back then it was new to me that like today still 1.6 billion people in the world don't have access to the traditional financial system. 1.1 billion people in the world don't have a government issued ID, and therefore maybe also don't get that easy access that I have and that I'm used to. And also I then looked into how high costs for like a simple financial transactions are around the world. So looking at the World Bank report on remittances this week, you can see that basically the average cost of international remittances is 6.4%. There are corridors, and there's like quite a high number of corridors where the average cost is higher than 10%, higher than 20%. So especially in these countries where people are like earning much less, the transfers are even more expensive. And then this friend told me, now we have this big problem. We have basically so many people excluded from traditional finance, and we have this powerful technology, but nobody is using it for that. Basically, this powerful technology is used a lot for like trading and speculation, which is nice. It's a nice use case for that because settlement times are short, but you could use it so much more. So you could also use it to give these people access to the traditional financial system, to build something open. And this is how I got into the space. It really excited me and still excites me to work on that mission, to build something more inclusive. And this is how I got into it. And Celo's mission today is still to build a financial system that creates conditions for prosperity for everyone. And I'm really happy to be part of this mission on building something like this. This is basically my story, how I got into crypto.
I love that story because the financial inclusion element to the work that the pioneers in the space are doing is probably one of the most important humanitarian efforts we can pursue. Poverty in the world causes the most amount of sadness and I think incredible damage to our communities. And so giving people equal access to the same tools to manage their wealth and then trade that wealth is extraordinarily important. So I'm very grateful to hear that story. And I think a lot of the work that the Celo team is doing is very deeply mission aligned with the same things we're trying to do here at blockchain.com by democratizing finance and giving everyone in the world access to an equal playing field. We'd love to hear the origin story for Celo. Talk a little bit about your role and how it got started. We understand the mission now. So how did it get going?
Yeah, basically, when we talk about Celo in general, what it is and what it could do, we always mention like three very important parts of Celo, basically mobile, open, and real. Mobile, and I'll touch a bit more on these like three different parts. Mobile in being a mobile first blockchain, open in being fully open source, fully decentralized, being a open source and decentralized ecosystem of many builders and different projects around the world, and real, powering real use cases like lending, borrowing, saving, sending remittances, micro work, all these use cases. And my role on Celo is I'm an economist, so I focus on economics, everything that is related to blockchain economics, to economic decisions on the blockchain. So when started to work on Celo, I focused a lot on how stability could and should look like, and this is also something we can talk about more later on. So I put a lot of thought into designing the stability protocol with a great team, how we could make stablecoins actually stable, because on Celo, I mean, Celo is a layer 1 blockchain. It's a proof of stake blockchain, but it's also digital money, and different assets live on Celo. You already mentioned in the beginning the Celo Euro, which is a stable coin that is tracking the value of the euro, but there's also the Celo dollar tracking the value of the US dollar. So different stable coins. In future, we will see many more stable coins. The community can decide on which other stable coins will be launched on Celo, since also the governance on Celo is fully decentralized, and every Celo token holder can vote on governance decisions, for example, on which stable coins to launch next. And we have, for example, strong communities in Brazil and also in the Philippines that really would be interested to see a Celo Brazilian Real or a Celo Philippine Peso launching next on Celo. So I am trying to support the Celo ecosystem by working on economics at C Labs. And C Labs is basically one of the projects working on Celo. One cool thing about Celo is it currently is, at least to my knowledge, one of the most global ecosystems in the world. There are currently builders in 113 countries around the world already. It's a very fast growing ecosystem in terms of numbers of developers joining the community. And we really would like to encourage more and more builders to build their solutions on top of Celo. The cool thing is it's similar to Ethereum. It's also like smart contracts are written in Solidity. It's compatible to the Ethereum virtual machine. So if you're, for example, an Ethereum developer and you think about developing for a mobile app, maybe you should consider also building something on Celo.
Thank you for that great summary. I'm going to hand it off to Garrick, who is also an economist by training, and I think we'll have some good questions for you. So Garrick, after you.
Full disclosure, economic historian, so slightly different PhD than economics, but appreciate that. Markus, it's great to have you on. And I think the first time I encountered Celo in live was at a London DeFi conference a few years ago. Was that you presenting some empirical research or survey research you'd done in local markets on kind of financial inclusion, adoption?
Actually, yes.
Okay.
And actually, basically, the topic back then was a different kind of research. It was not so much the research on basically how a stablecoin stays stable, but basically what features should a stablecoin have so that many people could use it. So some of the features of the Celo like stablecoins are, on the Celo blockchain, there's basically you can link a hash of your phone number to a public key, meaning you basically can find other users on the blockchain by just knowing their phone number, which is a cool feature because not in every country like people have access to high performance computers, and also not in every country or not everyone has like a lot of knowledge about how to do transactions on a blockchain. So here, having this phone number feature allows more users to basically send stablecoin to each other. Another nice feature is that the Celo blockchain itself has a 5-second block time. So every stablecoin settles with a transaction also settles within 5 seconds. So just by knowing your phone number, I can now send you Celo dollar, Celo euro, and it settles within 5 seconds, which is also cool. And also on the Celo blockchain, the gas fees are super low, but also it has this nice feature that if I send you a Celo dollar transaction, I can actually basically pay for gas in Celo dollars. If I send you Celo euros, I can pay gas in Celo euros. And therefore, yeah, we really hope that this allows more people to use these stable coins for real use cases, for real transactions. And this is actually in the end the research we did back then. What would people need as features from a blockchain and from a stable coin to use it? And therefore it's pretty cool going forward. On blockchain.com you could basically buy Celo euro, you could hold it there and earn a reward. And basically instead of saving in euros and getting negative interest rates, even you could start to save in Celo euros at blockchain.com. So that's a nice feature. And then maybe one more thing on that. The one more thing is always something that excites me a lot as well. Celo blockchain is also a carbon negative blockchain. Of course, transactions have less carbon emissions because it's a proof of stake blockchain and therefore less energy intense than proof of work. But also at a governance level, there's a part of the block rewards that are used to plant trees, basically in the end, together with some projects. And therefore carbon emissions are offset, and therefore it is even carbon negative currently. Sorry for jumping into that, but this was basically the usability research was what I presented back in London.
Yeah, no, I'm glad you shared all of that. And I think for those who are new to Celo and crypto as well, it's important to highlight, some of this kind of groundbreaking research that project teams like Celo are doing, looking at, tough questions that often have been overlooked. And I've been invited to talk to the IMF and World Bank about how can we get remittance costs down. And I think there's this kind of view sometimes that if they can just push a decree from high above, it will all magically happen and fees will go much, much lower. But there's, I think, also another side to it, which is getting out into the field, doing original research like Celo has done, that informs the product design. And I think you guys should be acknowledged and complimented on your groundwork there. Let's get into the stablecoin now, and stablecoins are in the news again. We just had the White House release some guidance, regulatory guidance on stablecoins. But let's just start for folks who are new. What exactly is a stablecoin, and then let's get into the Celo stablecoin, how it's constructed.
Yeah, and I would say there are many different definitions on what a stablecoin is, and it's probably not like an academic exact definition, but in the end, it's basically a token on a blockchain that tracks the value of something else, and this something else, and it's basically it gives you a stable exposure to this something else, and this something else could be fiat currency, and actually the majority of stablecoins are just US dollar based stablecoins tracking the value of the US dollar. There's a simple reason why like many stablecoins track the US dollar, and there are not many or almost none stablecoins tracking the value of other currencies. And this is that most of the stablecoins out there are actually fiat-backed stablecoins, and the US dollar has positive interest rates. So as a protocol, if you give out a fiat-backed stablecoin that is tracking the value of the US dollar, if you do everything correct, then you should hold this US dollars as collateral for the stablecoins. And you as a protocol then would earn interest income on the collateral and could finance your operations. This is not the case for example, the euro, because in the Eurozone, we have mostly negative interest rates. And therefore, if you would like issue a fiat-backed euro-based stablecoin, you would even have to pay. That would be hard. But coming back to stablecoins, there are different ways how you could construct a stablecoin. One I already mentioned, that's the probably easiest way how to construct it. That would be a fiat-backed stablecoin. And as the name suggests, it's backed by fiat and holds collateral in a bank. So the big advantages, it's pretty easy. The big disadvantages are it's not fully decentralized because there is a centralized entity in that system. It's a bank. And it's not fully transparent because users, if they would like to get a full view on the stablecoin risk, they would need to do or would need to estimate the counterparty risk of this bank, the credit risk of this collateral in this bank, which is a tough job. And therefore, the regulators around the world actually say, if the major risk of a fiat-backed stablecoin is the bank collateral, then maybe we should regulate this bank collateral and should regulate the stablecoin as if it were a bank product, which makes a lot of sense. Then, because these stablecoins are not really transparent, we saw other stablecoins coming into existence that are backed by, for example, crypto. The nice thing about crypto-backed stablecoins is it's much more decentralized because basically you could decentralize the governance, and it's also much more transparent because you could actually verify if the collateral is actually there because it's in crypto, and everyone could check if the collateral is there. The big problem now is that basically the two biggest risks of this stablecoin is, of course, the demand risk for this stablecoin. It's like users actually using it basically. And does this demand match with the supply of the stablecoin, the number of stablecoins that are out there? So, and the second risk is, of course, the crypto collateral. It's volatile, and therefore the collateral could be worth less. And therefore, there's a third and a newer generation of stablecoins that are mostly or often labeled like algorithmic stablecoins, where there's a smart contract-based protocol that acts a bit like a central bank, basically expanding and contracting the supply of stablecoins depending on demand. And I think this is pretty interesting because since it's smart contract based, you could actually verify if this is actually working and if this protocol is doing what it's claiming to do. And therefore, it's very transparent. Celo dollars, Celo euros, they're all algorithmic stablecoins that have basically an on-chain mechanism that constantly allow you to exchange, for example, one Celo dollar for $1 US worth of collateral, and basically therefore constantly allowing you to expand and contract the supply of stablecoins so that it fits current levels of demand. The other nice feature is now you have like a fully decentralized stablecoin, and you could also imagine other currencies. You're not like you now can have a Celo euro as well, because you're not having to hold fiat somewhere in a bank that earns negative interest rate. You could now also have a Celo euro, and in future then the Celo real, a Celo peso, and so many more currencies, which is a nice feature, I think.
Yep. Yeah, there's a lot to cover there. Thank you for that in-depth discussion. And let me make two comments. One is on the three different types of stablecoins you described, the fiat-backed, the crypto collateralized. The fiat-backed common ones that are supported on the blockchain.com platform include USD Coin and Tether. crypto collateralized make or die is probably the most well-known and largest of those. And then the third, the algorithmic, which is where Celo fits in, is I think the most interesting and arguably the most challenging design for a stable coin. And there have been some noteworthy efforts in the past, and we're going to talk briefly about those. Basis being, I think, one of the most well-known attempts at creating a fully algorithmic stablecoin that closed down before launching, actually. But I just wanted to mention that for those who are newer to stablecoins and want to kind of dig more deeply into this outside of this webinar, we've published a couple major stablecoin research reports. Go to the research page on the blockchain.com website and download our State of Stablecoins reports for more in-depth details on these different designs. But let's talk about the collateral and a little more about the underpinnings of the Celo stablecoin, if you could, and how it actually operates.
Yeah, happy to. And first of all, I mean, like for all of these different stablecoin designs, having real users and having real use cases, basically having a real demand for the stablecoin is actually the best way how to make a stablecoin stable. Because if you have real users and real demand and real use cases, then people need that stablecoin, and therefore it can stay stable. And this is why, of course, also a large part of the work of the whole Celo community is not only going into making the Celo stablecoins like usable on a very simple like smartphone, even on feature phones, a $10 Android phone, because you have this ultra light client support on the Celo blockchain that makes basically sending it out a stablecoin transaction with a very simple phone super fast and very cheap. And this is something I really like as a feature in the Celo ecosystem, that there's a huge focus on building for real use cases. And for example, blockchain.com users who want to make payments in the future, they can save on blockchain.com by holding Celo euros, earning rewards for them, but then also using Celo euros for transactions, for remittances, sending it to family around the world. And instead of paying high remittances fee, just paying like a very low transaction fee that is less than a cent for a transaction, much less than a cent. So this is, I think, one very important example. Now, you mentioned Basecoin, and this is a very, very interesting example of an algorithmic stablecoin. The great and still wonderful idea is basically that you have a protocol that expands and contracts the supply of stablecoin to matching the current levels of demand. Basecoin actually wanted to do auctions to do that. And basically, if the price would be higher and there's basically more demand for Basecoin, then they would auction off additional Basecoin. If the price would be lower at a centralized exchange, the price, they would basically buy back in an auction stablecoin. This is a beautiful design because it expands and contracts the supply of stablecoin. I think the big challenge in that design is, one, the auction takes time and it's not running constantly, and therefore there's basically a delay. And this delay, if you scale as a project, can be very difficult, because actually you want constant stability, you want to have like a constant peg, but you're not running auctions constantly. So that was like, I think, a first challenge. Second challenge in an auction is actually you have to determine the amount that you auction off or buy back. And to determine this amount, you would need to make an assumption on the demand function. Basically, how much would the price react if I now would auction off 1 million, 100 million, or 1,000 additional stablecoin? How much would the price go down? And this assumption is like almost impossible to make. And therefore, when we designed the Celo stability mechanism, we had like something market-based in mind, where basically you don't have this delay in auctions, and it's basically constantly allowing users to either mint new stablecoin into existence, or to basically take stablecoin out of existence. And with this constant mechanism, you basically can then work on constant stability. And it worked great. I mean, even if in times where recently the crypto markets were super volatile, the Celo stablecoins, both Celo dollar and Celo euro, have been very, very stable. And therefore really happy with this mechanism. But of course, we continue to do research into the mechanism. Now, what I also like for these like both algorithmic stablecoins, but also the crypto-backed stablecoins is it is a high degree of transparency. So every user can basically, if they can read code, they can look into the smart contract design and see if this is actually happening, what I'm telling you or others tell you about different blockchains. They can verify it. And also they can verify if the reserve assets basically that are underpinning these mechanisms are actually in place. And also the Celo ecosystem that is this smart contract based has a reserve. So basically the mechanism is based on expansions and contractions, but this mechanism is also underpinned by a reserve. This reserve holds many different assets. Of course, it holds the Celo native asset, but it holds also Bitcoin and ETH. It now already also holds carbon credit on the Celo blockchain. And this is actually something that also excites me a lot. With a design like this, you could in future even imagine nature-backed currencies. Basically, you could imagine this reserve holding tokenized trees or tokenized clean water or tokenized clean air. And therefore having basically nature in the reserve backing currencies. This is actually an idea that is already in the initial white paper, in the initial Celo white paper. It comes from a book called Sacred Economics by a philosopher called Charles Eisenstein. And he wrote in his book that whatever backs money, people tend to do more of, make more of. When gold backed money, people wanted to mint gold because it's like printing money. So if we could actually create a system where nature backs money, people would give a much higher value to nature. And these assets, if for example, trees would back money, then you could maybe hopefully see more people planting trees or saving trees because they have a higher value. And this is something which excites me, where the Celo ecosystem now is also very active. There's a lot of projects that like trying to build these things. There are a lot of projects that do research in that space, and it's an exciting space.
Absolutely, and I'm glad you brought in that aspect to the discussion. So let's talk, I guess, a bit about central bank digital currency and stablecoins, because this is another, I think, really important and timely topic. We've been seeing in markets like the United States more openness from some central bank governors around the idea of maybe stablecoins, in essence, serving as central bank digital currency, or playing the role many are envisioning a future central bank digital currency could play. And that's just one example. I think there's different views around the world. If you go to China, I don't think there's an openness to that idea. I think this is going to be, from what we can tell in China, a more state-driven central bank digital currency, more closely controlled by the government, less reliant, if at all, on the private sector. And I wondered if we could talk about Europe and what you could see or imagine happening with the Celo Euro and the ongoing discussions in Europe around central bank digital currency, and just your thoughts on CBDC in general.
Yeah, happy to talk about that. And there's like two parts to this discussion. I think one part is a bit about the regulation, and the other part is, again, like what are central banks? What are we currently seeing in the central bank space? On the first part, on the regulation part, especially if you look into Europe, the European Commission is currently working on the markets in crypto asset regulation, or short MiCA. And it's really interesting to see for me that in MiCA, they actually actively call out decentralized protocols and and differentiate between decentralized protocols and protocols that have a centralized counterparty risk, like, for example, fiat-backed protocols. And therefore, I think having this separation is already a very interesting, and I think a very, very right direction that also the regulation is going to. A second part of this discussion is basically, what do we see when talking to central banks? In the end, I mean, especially since, for example, also social networks announced that they are active in crypto space and blockchain space, every central bank in the world started to look at digital currencies. They know that this technology is coming, and they, I think, also know that they not always did the best job on the financial inclusion side. They also did not always did the best job on, for example, innovation on, for example, settlement. If I would like send via the traditional banking system, via SWIFT, a payment, I know that it settles between 2 and 5 days, depending if there's a bank holiday, depending if I send it before the cutoff time, and so on. So it's funny how the traditional system still works. On the other hand, of course, looking into this technology for central bank is scary, I would say, because there's like already so much happening. So central banks look into it, and we would actually like to talk to each and every central bank out there and basically help them to understand the technology, help them to do research together, and also help them to consider also a public network. Because if they would launch their central bank digital currency, for example, on Celo instead of a closed technology, they would benefit from all this like features Celo has in terms of the mobile first features. They would benefit from a lot of interoperability that Celo has, which is nice. And to support this, C-Labs introduced Provo. Provo is basically an Esperanto word for trying out. Celo is an Esperanto word for purpose, and Provo actually enables central banks to safely and securely explore digital currencies by just clicking and playing around in a sandbox to create a central bank digital currency on a test net to basically test and iterate and future-proof and basically learn how transactions on this technology would work. I actually can see in future, I mean, in countries, actually a competition of different types of currencies, of like central bank digital currencies, of nature-backed currencies, of maybe use case currencies, of currencies for saving and currencies also for designed for transactions. And I think this like future is really exciting because it enables a lot of innovation.
Yeah, thank you for that. So I think you touched on something earlier that I want to return to, which is, the fact that today in the crypto space, US dollar pegged or, backed stablecoins dominate. And there have been some prior efforts to launch Euro stablecoins with mixed results. You mentioned negative interest rates, which certainly make operating a Euro stablecoin more problematic and more difficult. But I wondered if there might be other challenges, other issues at play. And I think this is important to talk about, given that, many people might wonder, what's the probability of success? Why is this time different? And can you speak to that? What beyond what we've already covered, gives Celo a chance to make, this Euro product, a huge success?
Yeah, and I mean, there's basically two sides to it. On the one hand, of course, Celo, and I mentioned this, has this very international developer community that is quickly growing, and also the Celo Foundation is supporting this community by, for example, giving grants to projects who would like to build their own tools and their own like dApps on top of Celo. I think this is super, super important to build something like open and permissionless to allow projects in Europe as well as in Africa or Latin America or everywhere else in the world to build their own projects and products and therefore benefit from this technology. I think that is the first part of it. A second part of it is in addition to this like community of builders, Celo also has what we call the Alliance for Prosperity. The Alliance for Prosperity is an alliance of now, I think, 150 mission-aligned projects around the world that would like to use Celo technology and Celo currencies for like their users. And they are very interesting like projects from all over the place in this alliance. So one like set of alliance members are actually, for example, charity organizations like Mercy Corps, Give Directly, or the Grameen Foundation that use Celo technology for basically having very efficient charity projects. For example, Grameen Foundation did a COVID relief program. But in this Alliance for Prosperity, there are also other like technology companies, like for example, Deutsche Telekom, that is one of the largest or the largest mobile carriers in the world with 242 million mobile clients. That could in future maybe also be enabled to use basically Celo stablecoins to send remittances around the world with their mobile phone. We also have, for example, PayU in this Alliance for Prosperity. In this Alliance for Prosperity, and PayU is like a large payment provider that could allow in future merchants around the world to accept payments in Celo. We also have, for example, Opera in there, which is a browser that integrates Celo stablecoins in their browser. So I think the difference here for the Celo ecosystem is basically this openness and these strong partners, including also now blockchain.com as a strong partner that enable use cases for these stablecoins. And for example, on blockchain.com, there's strong use cases. You could now earn interest on euro, and basically you don't earn interest on euro in a bank account, but you now earn interest in Celo euros and in blockchain.com. And this is a first exciting use case. And then when we have like maybe many builders listening to this call here, to this podcast, maybe they have like interesting ideas or would like to enable payments in their companies with Celo Euro because it reduces for them the cash handling costs. It reduces for them maybe basically the payment provider costs, and they could accept payments. You could have like lending and borrowing in this currency. And therefore, I think like the openness of the ecosystem and the strengths of the ecosystem here now really makes a difference for also the Celo Euro.
Yep. Yeah, I just want to reemphasize that point you made. Thank you for advertising the blockchain.com interest earning opportunity on euros. But 4% compared to effectively zero or negative is a killer, app, is a killer use case by itself that didn't exist a few years ago for other euro-backed stablecoins or euro stablecoins. And also, we've seen, giants like MasterCard, announcing, that crypto is going to be supported on their payment network, stablecoins. So the regulatory clarity that's coming, the support from traditional payments giants, the DeFi landscape, the opportunities to earn interest, it's a really different world today than it was even 12 months ago. In other words, don't let the history necessarily guide you completely when the landscape has shifted so radically, in my view. So we're just about to run out of time. Nick, I want to give you a chance to come back with any last questions for the good doctor here.
Yeah, it's been watching the questions come in too. One here is what's the vision in the next 10 to 20 years for Celo? I think that'd be a good way to conclude that. But maybe if you could add also, some things you're excited about, from either the foundation or the protocol team that you guys are working towards that you can tease out a little bit on over the next 6 months would be great. And then what else says here, the discussion is on another level. Thank you. We're all learning a lot. So thank you both, Garrick and Markus, for your thoughtful contributions today. So Markus, we'll end with that, and I'll have one short concluding comment, and then we'll let everybody go.
Exciting. I'm very happy that the community, the blockchain.com community, is liking the discussion, and happy to continue this. It's really exciting. I think two things that excite me a lot, and this is basically tying into this like vision for the future. One thing is like on Celo, we now in future see like many different currencies. After Celo Euro, Celo Dollar, I already mentioned it. It could be a Celo Peso, Celo Yen, a Celo Ruble, like all these currencies could launch on Celo. And then basically on places like blockchain.com, you could basically have like exposure to all these different currencies, and you could like have your FX on this, but you could also have a opportunity to not only save in Celo Euro, but also have an opportunity to send a remittances payment to your family that lives somewhere else, and they can then turn it into their local Celo currency and do payments with that. This is something that excites me a lot. And this other thing is basically, it's really exciting that we, with this technology, with the Celo technology, we have the opportunity to also build something nice for the planet. I mean, as I said, Celo is carbon negative, but also this vision of having tokenized trees on Celo, having like tokenized clean water, tokenized carbon credit, tokenized removed carbon from the air. Everything on Celo is really nice, because it could actually provide also the incentives for each and everyone to basically save the planet, and maybe financial incentives are finally an incentive that people then actually would act on. And therefore this excites me as well. Those are two things, like having many different local currencies living on Celo, many different types of currencies, maybe even local currencies, use case currencies, and so on. And also having these nature-backed currencies is something that excites me.
I think it's amazing that we get to have that conversation while the world's leaders meet just north of here in Scotland for the UN Climate Change Conference, COP26 right now, in Dublin as well. So very timely. I think what you've described is sort of, super affordable, accessible, cheap global payments, a carbon negative financial system that's deeply integrated into the internet, and tools for wealth preservation in a world where we're seeing negative interest rates are all strong examples of the world's community addressing the world's biggest challenges. And so I appreciate the open invitation to help build. And just to summarize a special announcement we're making today. So blockchain.com and Celo are very pleased to announce we've joined forces to bring the benefits of stablecoins to Europe. And we'll be announcing more details about this partnership in the very near future, both online and blog, and across our social channels. So stay tuned for that. Thank you so much, Markus. Hope you have a wonderful rest of the week. And I understand you're down at the Web Summit conference, where the technologists are describing the future of the world and recruiting people to join their ranks. So if you're at Web Summit this week, definitely go find the Celo team. And thank you to Dr. Eric Heilman, as usual. For anyone that missed anything today, this podcast will be available online on all of your favorite streaming services, as well as on YouTube. And thank everyone for their time today. Have a fantastic week, and we look forward to seeing you at the end of next month.
Thanks for having me.
Cheers,
It was super exciting.
Thanks, Markus. Cheers, everyone.